Hello everyone, welcome to Concepture Academy. In today's lecture, we will explore a very important topic, business risk. As you know that every business aims for growth and profitability, but success comes only when risks are properly managed. Remember, risk is a natural part of business and instead of avoiding it, companies must learn to understand and control it. And this is the focus of our today's lecture. Let's start by understanding risk itself. Risk simply means the chance that something undesirable will happen, and since the future is uncertain, whether it's a stock market, interest rates or exchange rates, business need a structured approach to identify and manage risk. And remember that growth attracts investors, but it is impossible to sustain without risk management. So what is exactly the risk management and how do business apply it? Risk management is not about eliminating risks completely because it is impossible. Instead, it is a continuous process of identifying, measuring, and making decisions about which risks to take and which to reduce. So, businesses that succeed are those that learn to take calculated risks. Means that the risks that are measured and balanced against the possible rewards. The risk management process involves multiple steps, but it begins with identifying what risks are present in the business environment. And next, those risks are measured, often using financial and statistical tools available with the business. After that, business explores the instruments like derivatives or insurance to shift or share some of those risks. Once options are clear, a strategy is selected because business will opt now that whether it wants to avoid the risk, transfer it, reduce it, or sometimes it will want to keep it. So finally, it is essential to evaluate the strategy over time to see if it is working or still some improvement is required in the risk management process. Businesses face a wide variety of risks, but they can generally be grouped into 8 categories, and each type has its own causes, effects, and management techniques. We will go through them one by one in detail. Let's start with the market risk. That is the most important type of risk business faces, and it involves interest rate risk, equity price risk, foreign exchange, and commodity price risk. Let's understand it. If interest rates rise, the value of fixed income securities fall. Similarly, if stock prices are volatile, investment may lose value. Foreign exchange risk comes from fluctuations in currency values which can hurt the importer or exporter. And finally, commodity prices like oil, gold or wheat can swing sharply due to supply, demand or geopolitical events. Alongside market risk, another major concern is whether business partners or borrowers will meet their commitments or not, and that is called the credit risk. And it is the chance that a borrower or business partner fails to pay on time or at all. So a company may lose money if a customer defaults or if a partner's credit rating is downgraded. This is especially serious for banks and financial institutions, but it affects every business that extends credit. Even when credit is stable, companies may struggle if they can't access cash quickly, and this is liquidity risk and another very important risk. And there are two types of liquidity risk, funding liquidity risk and asset liquidity risk. So let's start with funding liquidity. It happens when a company cannot raise enough money to cover its obligations like repaying a loan, while the asset liquidity risk happens when a firm owns valuable assets but cannot sell them quickly without taking a big loss. So both forms can put serious pressure on a company's financial stability. Okay, now let's move towards the internal risks that come from within the company, and one of them is operational risk. It comes from day-to-day business activities and includes errors made by employees, weak internal controls, frauds, or even system failures. Natural disasters also fall under operational risk as they can disrupt business operations suddenly and severely. Beyond operations, business may also comply with laws and regulations, which brings us to another type of risk, that is legal and regulatory risk. Actually, legal and regulatory risk arises when laws change or when business face lawsuits. For example, a new tax law can increase costs or a lawsuit may bring financial penalties and reputational damage. So business need to stay alert to the legal environment around them. Now let's consider a risk that is directly tied to the business activities, and it is called the business risk itself. It refers to uncertainties in the market itself, like whether customers will buy enough products, whether prices will stay profitable, or whether production costs will rise. A weak strategy or damaged reputation can make these risks even worse. Now there is another important risk. When business take on big long-term projects, they face what we call strategic risk. It occurs when a company makes large investments in uncertain projects, such as entering a new market or launching a major new product. If the project fails, the financial losses are large and investors may lose confidence in the management. Closely related to strategic risk is our final type of risk called reputation risk. It is one of the most dangerous risks for any business because a damaged reputation can make customers leave, regulator can lose trust, and investors withdraw. Remember that reputation can take decades to build but may collapse in a single scandal or failure. Let's have a quick recap. Risks are unavoidable, but businesses can manage them through a structured process. So we explored 8 major types of risk and each requiring different response by the business. Ultimately, the goal is to avoid risk completely and also to balance risk with return for sustainable success of the business. That's all for today. Thank you for watching this lecture on business risk and risk management. I hope this session gave you a clear understanding of how businesses face and control uncertainty. If you found this helpful, please do not forget to like, share and subscribe to Concepture Academy. Your support helps us to continue sharing valuable knowledge on financial and accounting. So let's keep learning. See you in the next lecture.